Dear friends, welcome to weekly view on markets. Market was hit by US trade tariff during this week. Nifty fell around 2% and broader markets fell by around 3%. Bank Nifty looks technically weak on the charts as it has broken the support levels after fall of around 3% during this week. Nifty, Nifty mid cap and Nifty small cap indices have closed at support levels on the chart. We can look forward for a technical bounce back in the coming week. GDP growth for first quarter, that is April to June, has come at 7.8%. It is beating the estimates of around 6.5%. So this is a good news for the economy and markets. This could be positive trigger combined with the bilateral talks with Japan, China, and Russia at the weekend. Big rally is not expected in the market till there is clear visibility on corporate earnings. Till such time, markets will consolidate in a broad range. Nifty closed at 24,426. It lost about 443 points, that is 1.78%. Bank Nifty lost 2.71%, that is 1,493 points, closed at 53,655. So Bank Nifty looks very weak on the charts. Mid cap index closed at 55,727 after losing around 3.30%, that is 1,902 points. Small cap index lost around 600. There was a lot of uncertainty because of the trade tariff. Only FMCG sector gained around 0.73% during this week. Rest all sectors lost from 1 to 3%. So there was all around selling, and selling was majorly by FIIs, but DIIs have bought during this week also. Now let us look at technical charts. This is the daily chart of Nifty. Here we can see the Nifty has come and closed near the support level of 24,400. On the back of good GDP figures and various world leaders meeting at SEO, specifically China, Russia, and India are having bilateral talks. So these are going to give some counter measures and counter sentiment to the trade tariff. Because of all these things, I expect the Nifty to pull back from this level. And basically, the corporate earnings, companies' earnings are weak. Till such time the company's earnings improve, it may take another 1 to 2 quarters. Till such time, Nifty will broadly trade in the range of 24,000 and 25,500 on the higher side. This is a chart of Nifty mid cap index. Mid cap index also we can see has closed at the support level. It may bounce back from here in the coming week. And on the higher side, it has got strong resistance at 59,800 levels. So Nifty mid cap index is also likely to trade in this band for few more months. This is the chart of Nifty small cap index. Small cap index also has closed at the support level of around 17,300, and it is likely to pull back from here in the coming week. And the broader range for Nifty small cap index is 17,000 on the lower side and 19,000 on the higher side. It is likely to trade in this range for maybe few more months till we get a clear visibility on the earnings of the companies. This is the chart of Bank Nifty index. Bank Nifty index has broken major support level of at around 54 5,200, and from there it has come to 53,000. It has even broken 54,000 levels. The chart looks very weak. It has started making lower tops and lower bottoms. You can see here after hitting 57,600 on June 30th. After that, it has started making lower tops, lower bottom. So out of all the charts, Bank Nifty charts looks quite weak for the time being. Whether it will go further down or whether there will be a bounce back, we'll have to see. Now let us look at some of the fundamental parameters of the market. Indian macroeconomic fundamental parameters continue to remain quite stable and strong. RBI for forex reserves is at 693.72 billion US dollars. It is down by 4.05 billion US dollars in this week. Foreign exchange rate is 88.18 rupees for $1. Rupee has fallen sharply during this week. Dollar index is at 97.86. I think RBI has allowed rupee to depreciate. Depreciation in rupee helps the exporters. So because of tariff and other things, I think RBI has allowed rupee to depreciate to help the exporters. Brent crude price is at $67.48 per barrel. Despite all these trade wars and all these things, the dollar Brent crude price is quite steady. As long as crude price is below 70, it is good for Indian economy and also for the markets. Gold has crossed 1 lakh mark and it is at 1 lakh 4,950. Gold has gone up during this week due to the uncertainty. Whenever there is uncertainty regarding trade, economy, situation like wars and all, the gold prices tends to go up. The gold price is already at a all-time high. I don't advise investors to buy gold at this level. Gold may consolidate or even it can have small correction from these levels if the war situation and trade talks get settled in few months. FIIs continue to sell. They have sold 21,151 crore during this week in equity, but DIIs have offset that and they bought 28,465 crore in equity during this week. So continued DII buying is giving support to market at lower levels. Surprising is the first quarter GDP figure, which has come at 7.8%. This GDP is higher than the estimate of 6.5%. Markets will give a thumbs up and cheer for this on Monday and in the coming week. Services sector has grown faster than industry, that is manufacturing. So manufacturing, there is growth, but higher growth is desired. There is a temporary deadlock in trade talks with US. 50% tariff on Indian exports to US will adversely affect for Indian exports oriented companies. Government may announce some assistance to such companies. Government has already given some hint that there may be some incentives given to offset the tariff burden on the companies so that our export is sustained. It is a trade tariff is a short-term pain. Government is likely to explore new markets for Indian exports, and I am quite sure India will become stronger in the long run. They will, because of these US unilateral imposition of high tariff, India will try to diversify its trade in the coming years. They will not concentrate their exports to one country. So that is good in the long run, and in turn, our economy will be stronger. So this trade tariff is a short-term pain, but it is good for the country in the long run. We will become self-reliant and more diversified in our exports. While the view on the market is clouded because of all these developments in the short term, the long-term prospects of Indian economy remains quite good. I'm quite sure the investors who weather through these uncertainties in the short term will get good returns in the long term. Please remain invested. Continue your SIP investments. You will get very good return in the long term. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions, which I will reply. We'll meet again next week. Thank you.